Trevor here with the PowerEdge Trading System. Want to walk you through the latest enhancements to the PowerEdge Trading Indicator Suite. This is taking and building off of what we had on tick charts. So many of you learned first the PowerEdge Trading System using tick charts. And because of some changes in the industry, one of the major platforms that a lot of you were trading on for ticks has now been limited to one firm. And so as a result, I know a lot of traders have gone back to trading time-based charts and specifically on TradingView. So I built out two indicators that are great to use with the Power Trading System, but can also be adapted to a lot of models that are already out there. And so I want to walk you through them and show you high level how we use them. And so everything that you see here on the chart in front of me is made up of two indicators, and there's actually more that these things do that I have turned off, but it gets kind of crazy on the chart if you have everything turned on. So my recommendation specifically for the power chart is, once you understand all that it can do, is turn off anything that you don't use as part of your model. Now we teach a number of different models, and this can also be used for your own models, but it can get pretty noisy. So just encourage you to use what you prefer to use for your models, because I don't think you need everything on the chart that this thing does. So we're going to start going through it. We'll start with the latest enhancement to our dashboard. Right here at the top right side of your chart, we have our Power Bias dashboard. And so what this is showing us is across the various time frames. So we've got the 1 minute, 5 minute, 15 minute, hourly, 4 hour, and daily. It's giving us the bias. So what's happening at those time frames right now? Are we in a bear bias or a bull bias, or a strong bull or a strong bear, or are we pivoting, which is more of a neutral and potentially reversing? And so this is showing us at each time frame what's going on. Now the wonderful thing, and where high probability setups occur, is where you've got confluence across multiple time frames. Okay, let's say everything here is bearish and we get a reversal off the bottom and we start seeing, as first it starts with M1, it flips bullish, then we see M5 flip bullish, then we see M15 flip bullish, and you start seeing the signs of that reversal to where the market reverses. But even more exciting is using it for pullback indication. So let's say we're in a everything's, and it doesn't need to be the daily, the 4 hour. For intraday traders, you're mostly going to care about the 1 hour, the 15 minute, the 5 minute, and the 1 minute. So if you are a 1 minute trader and you want to make sure that at least 2 or 3 of the time frames above you are in the direction of the trade you're looking to take. So if we're in an uptrend on the hourly 15.5 and the 1, and then all of a sudden one flips and goes bearish, and that is indication, hey, we're in a potential pullback here. If everything else is staying red, M5 to H1, and then we get M1 to wrap around and start showing bullish again, then that's a good sign that we're going to see a continued trend to the upside. Okay, so you combine that with your stacked confluence and signals off of a momentum engine, the power band, as well as your setup rules. It's just, again, an added confluence to enter your trade. The other thing I love about it is market mode, M mode here. It's just showing you current state, what's going on. Are we trending, chopping around, neutral? And it'll just show you right here the current state of the market. So right now we're neutral, as you can see, definitely mid-range of Friday's price action. This is yesterday's price action. Today's a Saturday that I'm recording this video. Then you can see, indeed, we are very neutral. We're not trending right now. And so that's what we're seeing there. ADR, average daily range. Right now I have it set across 14 period. And it's showing the average daily range for S&P. So the ES futures contract is 79.02 points. So below that, we show, well, what percentage, based on where we're at in the day, what percentage have we used of that 79.02? And so on Friday, we closed out having used 98% of it. Where this is helpful, let's say you trade the New York AM session. You jump online, say, to get ready for your 9:30 New York market open. Market's been trading overnight, right? You have Asia. Really what you care about this is the from midnight onwards. You look at the London session, and let's say in the London session you had a massive run up, and you're sitting at 82 points already on the day by the time you get to your chart. And it's going to tell you you are over 100% of the average daily range, the ADR, and you can come to the charts thinking, you know what? I can't expect much more expansion out of this thing because we are already at the over the average daily range. Okay, so we've used over 100% of it. So that might change how you look at the market. It might manage your expectations. And so that's one thing I find extremely helpful is showing up, understanding where we are against the ADR, and then how I manage myself and my trade plan accordingly. The next thing, ATR. Wow, has this been super useful? I trade mostly gold futures. I do like the ES and NQ as well, but lately I've been trading gold futures. And this is super helpful and important, I believe, to keep track of, specifically for position sizing. And so about a week ago, even the beginning of this past week, during the New York session, average ATR was sitting around anywhere from like 7 to 13 points on gold. Okay, and 13 was at the high end. After FOMC this past week on Wednesday, we were seeing ATRs during New York session consistently hovering around 25 to 30. Okay, so you cannot use the same position sizing in that kind of market that you were using when the ATR was sitting around 7 or 13. If you do, you could do some serious damage against your account. It's going to throw your risk reward and your risk management out the window. So I always preach, keep an eye on that ATR, manage your position sizing, especially because we use swing lows and swing highs for our structure for our stop losses, and it's often 2 or 3 candles away. So I highly recommend keep an eye right here on the ATR and manage your position sizing accordingly based on that. Okay, so great enhancements to the dashboard. I likely in a future version, which I'm going to be rolling out in a couple weeks, I'm going to be adding just a news box here, and it'll just say red folder news and then in a countdown to red folder news, just so you can keep an eye on when to be out of the charts, out of any trades going into red folder news. Okay, what the power chart also does is it plots your key daily structural levels. Now you can turn any of these off. Okay, nothing here has to stay here. You can turn off whatever you don't use. But I like to watch settlement. So this is based on the CME cash settlement level from the prior day. Okay, because it often acts as a reactive point. We track the new day opening gap, as well as down here we have the new week opening gap. We track, if you're an opening range trader, this is tracking the first 15 minutes of the New York Open. So it's giving you the OR high, the OR midpoint, and the OR low. Again, if you don't use the opening range, you can turn it off. No big deal. We also have New York midnight opening price, a key level for rejections, support, and resistance. So we love to track that. We have point of control. So this is pulling from the New York session of the previous day, the level where the majority of the volume was traded during that New York session. Okay, very reactive level. You can see we used it here. Support, 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 then a resistance, and then here we're getting back above it as potential support. So we track that. We track value area high, value area low, where 70% of the volume took place in the previous New York session. So all these things you can turn on and off. We also track previous day low and previous day high. That's based on midnight to midnight, okay? I have found, going back in all the years that I've been trading, that tracking midnight to midnight for previous highs and lows, daily highs and lows, has been more of a magnet and area for reversals than when I'm using electronic opening close. Okay, so ETH hours. So in this indicator, I'm using midnight to midnight. Another thing that it tracks is, let's say you like to watch the 200 EMA. So many people have the 200 EMA on their charts for their given time level. But most of you will know, if you've been trading or watching the 200 EMA, whenever we get to it on the higher time frames, it also acts as a support, resistance, or rejection area. And so it's really good to see where these are. We can also use them as setup points. Okay, areas where price pulls into. If we get our signal and our setup I'm happy to take those trades off of the 200 EMAs. And so this way we can be, I like to trade on the 5-minute, and I can watch the 5-minute and see all the higher time frame 200 EMAs on my chart. Okay. But if you don't want to see them, you can turn them off and they will leave your chart just like that. Okay. Then we've got the 15-minute and hourly fair value gaps. So again, if you trade 1 minute, 3-minute, 5-minute, but you also like to use the higher time frame fair value gaps to pull into before you start looking for your setup, then you can turn those on. We'll put on the hourly here, for example. There you go. So it's plotting your hourly bearish and bullish fair value gaps once price closes through it. So if it's the hourly, once price closed through it on the hourly chart, it stops plotting to the point where it was closed through. Okay, so it's keeping your charts fairly clean. But you can see here, Friday's a great example, is we were just in a, I call this a gap sandwich, but we were ping-ponging between the new week opening gap and this 1 hour fair value gap up here, which also had the new day opening gap. So we went off the NWOG up to the NDOG and this gap, and down to NWOG again, and then back to the gap again. And so we were just in this sandwich. So you can find setups having this on your chart. Okay, but you can turn it off. The other thing that you can track is the sessions. So Asia session, you can track the London kill zone. Same with New York, and same with AM and PM for New York. Okay, so you can see the highs and lows of the range and the kill zones. Also know when you're in one, and you can adjust all the times accordingly based on your preferences. Okay, I'm going to turn those off. We also have built into this, I've put into it a reversal detector. And so what this is doing is it's looking at the ATR, okay, and then it's plotting a standard deviation multiplier based on that ATR. And so I have it set to 2. You can tweak this to whatever multiplier you want. You can apply whatever ATR look back and really customize this. But once it gets to the extreme and then starts pulling back into it, then you're going to get these diamonds. So these diamonds aren't necessarily, hey, jump into a trade. No, not at all. But what they do tell you is, hey, we're reaching the extreme of the ATR multiplier here, and as well as the standard deviation. And so just kind of a heads up, things might change, or it might be the end. In this case, right, it served right down here. We pulled into the NWOG, and it served as a, hey, I'm going to reverse now. And then it went up all the way to the NDOG. Okay, so you can use that with stacked confluence. I wouldn't take anything that's like just on its own, but when you start seeing stacked confluence in a GRZ, a get ready zone, as we learned in the PowerEdge trading system, then you can start to look at using them for signals, or at least to start getting ready to look for your setup. Down here, price jumped up, coming off of the new week opening gap, then it pulled back to point of control, and we get a reversal signal right here. So you can look for a setup. Then that went all the way up to the new day opening gap. This is the pretty much right after, this is the 940 candle. I wouldn't take anything here. Why would I take anything here? There's not a lot for me to say, hey, I want to short this. We're still in the first 15 minutes. I would rather wait to let the first 15 minutes form. It can tend to be very volatile. And then, yeah, you can kind of use them for that. You can see here we got another reaction. The candle quality is not the greatest. We're at the point of control. But often when we are coming off we're rejecting off the new day opening gap and the opening range high, I kind of want to, once we break the opening range low, I want to see, are we going to pull back anyways to retest the opening range low before we continue down? Okay, so definitely you want to use them in conjunction with your normal price action reading, market structure, and things like that. But they do give you an indication of like, hey, we might start a pullback here, or we might start a reversal. Okay, what else can I share with you? It's very customizable. You can turn everything on and off. If you want to just make it really quiet, turn everything off. You can turn on markup mode. It keeps on the opening range, and then the midnight dividers turns everything else off just to cut out the noise. I like to do a lot of my markups. If I'm doing any additional markup or just want to analyze a quiet chart, that's a good way to do it. You can choose your colors for everything, customize them according to your preferences. Here, you can choose what your line plots, the weight of the line plots, the style. I like my 200 EMAs to all be dotted. Everything else, I like to have different weights for each level. Some are more important or more significant than others. And then I know for my opening range, I like to have my middle line dotted, for example. So you can really customize it. Again, turn on, turn off, whatever you want. Make it your own. Okay. Let's see down here. So let's go to the power band. So that's the power chart. And the power chart is all about showing you where you might want to start looking for a setup. Okay. And if you've traded the PowerEdge trading system, you know we've got our early entry models, we've got our power blasters, and then we have the power pivot pattern that we'll use off these levels and GRZs to take our signals off of. And that's where the power band down here comes in. And so I am just going to, just so we see the power band, I'm going to turn off the plots for the reversal indicator. But the power band is a momentum engine. So it is showing us when momentum is showing up in the market. And there's a number of calculations that are going into how we identify when the momentum is hitting and plotting each of these. But when we see a red signal, that's bearish momentum. And when we see a green signal, that is bullish. And I should say strong bullish and strong bearish. Okay, everything else I've just doesn't show up or read. Now you can't just enter every green and every red. Again, it has to be all done within market structure, GRZs. We have our rules on how to use these. And so that's part of the course in the mentorship. But you can, and I can show you how we use this to make entries, and you can adapt this into your existing trading model or use one of our trading models. Okay, but I do use plots, so we can plot signals on the chart. Okay, this has been dialed in for ES specifically. For all the major futures instruments, like for gold, I have one that's been optimized specifically for gold. Because we use money flow and we use volume spread analysis for our filters on the momentum engine when we're plotting our signals, every instrument behaves a bit differently, and that's why I've created one for gold, so GC and MGC contracts, ES, MES, silver, SI, SIL, because each of them behave a bit different and have different behaviors around volume and momentum. So this is specifically for ES. But when you sign up for the mentorship, you get access to these indicators, lifetime access, and you'll always see in your invite scripts, you'll see one for each of the major futures contracts. Okay, so I've turned on each of the plots. Okay, these are the filter plots, and we are using so volume spread analysis. We're using RSI filter as well as money flow filtering. Okay, cuts out a lot of the noise. But I just want to show you an example here using power bands along with our power chart. So this is Friday's price action with Saturday today, but we saw price come up off the open, rejecting off of the OR low, comes up, dips into, remember there is a 1 hour fair value gap that I showed you earlier when we were plotting it. Here we also have the new day opening gap right here, and we just tick the middle of it right to the tick and reject away. And coming out of that rejection, there's a few things that I really like about this setup. One is we swept liquidity here of this high. Two, price showing bullish momentum, right? Very strong bullish momentum. Then the immediate candle that rejects off of the new day opening gap, the immediate next candle is strong bearish momentum. So we have two signals here. We have one that has been filtered. That's the triangle pointing down. That signal has been filtered by RSI filtering. So it's the first signal where price went into overbought and then started to reverse. Okay, so that's one level of filtering. The next, the volume spread analysis is showing us that across the last certain period of candles, the volume in this candle is greater, okay, than the previous candles. A little bit more calculation that goes into that, but that's kind of the high level of it, as well as money flow. So we're seeing a lot of negative money flow, bearish money flow coming into this candle as well. Okay, so that's what this triangle represents. The other thing we see an X down here, and that is showing an immediate flip. That's called a momentum flip, and we're seeing multiple strong greens immediately showing a rejection and momentum, strong momentum in the opposite direction. Okay, there was no gap. Like here, there's a gap, but here it was multiple. You want to see multiple strong bullish with an immediate bearish following in context with the key levels. Again, we're rejecting off nudity opening gap after a liquidity sweep, and we're also rejecting off the opening range high. Okay, so when you see that, it is a really good sign of a strong entry setup. And so you would wait for this signal candle to close, put your entry put your order one tick below the low. This is to go short, one tick below the low of the signal candle. Then you wait for the next candle to break that low by one tick. That triggers your order. Okay, and in market conditions like we saw on ES on Friday, where we're in a gap sandwich, I only look for 1-to-1. Okay, because you are going to get a lot of ping pong action like we saw. So in that scenario, let's say 1-to-1 right here. That's a 20-point move on the S&P 500, right? So $1,000 per contract, just over. Or $100 if you're trading one micro, and you can scale that accordingly. So that is one setup. If you wanted to reach, you could say, yeah, I want to go for, the high of the NWOG. Then you would be at 1.78R. If you, as you know, if we are also rejecting up here off the value area high, if we do that, there's a high probability of taking out the value area low. So maybe your model says, I'm going to extend it, and I'm going to take out the whole value area. Okay, and that's over 2R there. So a wonderful setup. You can see on Friday, New York session, this signal got you in off the high of day, and you could have ridden that down to wherever your model would tell you to ride it to. So I know for me, on a sandwich day like we have here, 1-to-1, maybe a runner to go stretch it is a good setup. So with all the signals that you see on the power band, so whether it's a flip, whether it's a filtered power band signal, you want to use the rule of entering in one tick below for a short once the signal candle closes. And if the next candle doesn't take it out, then you cancel the order and you wait for your next setup. Okay? Very, very important. You may be tempted to jump in as soon as the signal candle closes here. I promise you that's going to cause you a lot of grief. Waiting for it to close and the next candle to take the low is going to keep you out of a lot of stops, a lot of fake outs. So I can't emphasize that enough. None of this is financial advice, but my experience, that will save you a lot. What else can I share with you about the power bands? Yeah, you can really optimize a lot of customizations, but out of the box, I have them customized for the asset you're trading. You can customize the coloring of the plots, what you want in terms of the icons, where they show up. Yeah, same with your RSI. Now I'll show you the RSI. If you love watching where we are visually with RSI, it's actually right there. So here you can see, for example, this price action here, right? We created a higher high here, a higher high here, but on the RSI, we have RSI divergence. So let's say you like to trade RSI divergence. Notice how we're making lower highs on the RSI, but on each of these higher highs is a higher high. So there's a divergence there, which just adds more validity to this signal. And that's why this makes for a great filtered signal. So if you like to watch the RSI to see where we are and how price is reacting, this is a great way to do it. Down here, right, we've got, let me just draw this divergence in. So right here, off of this low, we can draw down to this low. Okay. So that's actually on the RSI, we've got a lower low followed by a higher low. But on our chart, our price action, this puts in a lower low. Again, showing a divergence and a high probability of price returning to the upside. Okay, so you have the option You can either hide it, like this. I just make them really big. If you don't want to worry about RSI, if that's not a thing to you, then don't need to pay attention to it. But if you want to watch the momentum signals along with the RSI, just make this a little bigger and pull it down, and you'll see it there. So a trade setup here is, while we don't have a plot, we can still use our signals off the power bands down here. So we've got a couple things. We have price coming into our GRZ, a new week opening gap. We have a signal coming off of the low, off in the new week opening gap, a strong rejection candle with a nice rejection wick here. Plus we have this divergence that we're starting to see here. So when this candle closes, we have a strong bullish signal here on our power band. We can look for a setup. This is an early entry. Okay. 25 points, and like I said, sandwich day, just given structure on Monday, you can look for 1-to-1 with a higher sense of higher degree of probability on a sandwich day like we had on Friday. And so 25 points, again, that's over a $1,250 trade for one ES contract. A great trade. So that's one idea of how we can use it. But again, you're waiting for the signal candle to close. This is a nice signal bullish candle. We get the signal on the the power band. You get the divergence here, and then you wait for that signal candle to close. Once it closes, you put your order one tick above it and wait for the next candle to break its high, which it did, triggering you into the order. If you miss that one, right, you say, I missed it. No need to FOMO. Wait for a pullback. And look at this. It pulls back right to value area low and then finds support. And we get a bullish signal right here along, right off this rejection off the value area low. And so you could jump in, wait for this signal candle. Again, we got a green signal on the power band, and jump in on the next candle when it breaks the high, cover the low, and you could target 1R. Now, your discretion here, but this trade here that you missed is still active. So you could either just trade 1R, or you could trade, that was 25 points, and get 2.17R off of this setup using this low as your cover, right? Because we often will use the swing low of what created the signal becomes where we put our stop loss, okay? So that's how you could trade that. So I just wanted to show that example to you on how we can use, the plots for our signals. These are filter plots. It's pretty picky, so you're not going to get a lot of them. But then also, giving a little bit of the sauce here, but it's using our key levels, our GRZ, get ready zones, like a new week opening gap. It could be an hourly gap, a 15-minute gap, what have you, to take this setup. We also trade power pivot setups. That's, my favorite. And on trending days, they're great. Larger ranges, they're phenomenal. This was a tight day here. I mean, our candles were big, but it was still a pretty tight range. But we do love our power pivots. So we got a power block here for those who know the system. You've got your bear block right there. Price breaks below it, pulls back into it, and then we're looking for a signal short, which would be wait for this candle to close. The next one right here, cover at the high. And again, on a sandwich day like Friday, we're just looking for 1R, which would be right there. Again, that's another just over $1,000 trade for ES. Now we're seeing these higher numbers right now, just again, because we're watching the ATR, and the ATR is a lot higher after FOMC. So be mindful of that. Scale accordingly. None of this is financial advice. Please know that. Do your due diligence. Do your back testing. If you are interested in the mentorship program includes lifetime access to these two indicators, all future updates. It includes the PowerEdge Trading System course, the original course, 26 videos that you'll get lifetime access to, as well as all future updates to that course. It includes trading live with me in a small group setting. I try to keep it at 5 or less, and that's trading 8 a.m. to 11:30 a.m. every weekday. during the week. So that we'd have 5 days together. Also includes one-on-one session just to make sure you're getting set up on the charts, answer any questions that you have, and get you ready for trading live together. And then from that ongoing, just support and Discord community with your small group. And anything that's recorded or talked about is shared within that Discord server. So you've got that there for access. And the price of that is $729. Again, the $729 US. And it gives you access, lifetime access to the 2 indicators, the 5 days trading live together with the small group in from 8 a.m. to 11:30. Sometimes it goes to noon, depending on how price action is. And then one-on-one, you also get the playbook. And so the playbook walks you through for each of our setups. You've got a page in the playbook that shows diagrams of the setup, the rules, the invalidation rules, risk reward, all of that you'll see inside of the course and the playbook. So that's it. But that is the PowerEdge Trading Indicator Suite. A little bit about the mentorship. If you are interested in the mentorship, and I make sure that the indicators do come with the mentorship because I really want to make sure that people are using it properly. It's not meant to be just, hey, give me the signals and I'll enter a trade. If you're thinking that way, then I don't know any system that works great that way. They may be out there, but I think it works better when you have market context, stacked confluences, and a really good rules-based entry system. So if you're interested, you'll see my Discord and my email in the description of the YouTube channel. Hit me up. Would love to hop on just a quick one-to-one call on Discord. I just want to make sure that this is right for you. I really genuinely care about you being successful and answer any questions that you have before you invest in the system and the mentorship. Again, $729 US right now. I am certain that's going to go up in the future. I know there's a ton. I've had feedback. There's a ton of value that's being packed into this. But this is, fairly in its early days, and so just want to give kind of the introductory price to people as they're joining and learning the system. So look forward to hearing from you. Thanks very much.